Thanks, operator. Good afternoon, everyone. On behalf of Dollars Capital, I would like to thank the management of Arihant Superstructures for giving us the opportunity to host their 4Q FY22 earnings call. We have with us today Mr. Ashok Chharjar, Chairman and MD, Mr. Parth Chharjar, Promoter, Mr. Abhishek Shukla, Chief Strategy Officer, and Mr. Deepak Lohia, CFO. Over to the management for the opening remarks.
Thank you, Mr. Rahul. Good afternoon, ladies and gentlemen, and thank you for taking the time out for joining the Arihant Superstructures conference call to discuss the FY 2022 results. I would like to take you all through operational highlights for FY 2022, followed by financial highlights of the year, before handing over to Mr. Parth Chharjar. The financial year 2022 was a landmark year for us on various counts, with successful launches, new project commencements, and new business development. Phayanayaka and Amisha, which were launched during this financial year, are already sold over 50%. We had a new tower launch at Project Arihant Aspire in Panvel in February 22, where we sold 311 units out of 494 launched units. That is around 63%. Financial year 2022 started with a robust volume growth, and it continued throughout the year. For the fourth quarter, we achieved sales booking of 674 units, aggregating to about 340 crores in value terms. With this, the FY 2022 sales bookings stand at 1,628 units and 13.8 lakh square feet area. In value terms, sales grew by 74% to reach rupees 764 crore. With engineering spends going strong, the collections too improved significantly in the financial year by 45% to reach rupees 416 crore from rupees 287 crore in the earlier year. The growth also came with improved pricing of rupees 5,500 per square feet in FY22 as to rupees 4,600 per square feet. That is a growth of about 20%. About 10% of this growth would be attributable to higher realizations, and the balance would be due to changing project mix. Coming to the financials, the total revenue for FY 2022 stood at rupees 332.5 crores as against rupees 272.3 crores in FY 2021. That is a year-on-year growth of 22.1%. EBITDA in FY22 touched rupees 71.3 crores as compared to rupees 50.2 crores in FY21, which is a YOY growth of 42.1%. With this, the EBITDA margins also expanded by 301 basis points to 21.4% in FY22 from 18.4% in FY21. The profit after tax for the current financial year saw a huge enhancement by 163% to rupees 41.4 crores in FY22 as compared to rupees 15.7 crores in FY21. PAT margins to increase significantly to 12.44% in FY22 as against 5.78% in the earlier period. This translates into a staggering growth of 270% in EPS to rupees 10.02 for financial year 22. The return on equity has also crossed 20% as against 11% in FY21. For Q4 ended March 31, 2022, the total revenue, EBITDA and PAT stand at 71.3 crores, 17.2 crores and 9.9 crores respectively. Please note that these figures are not directly comparable YOY, as there was an effect of monetization of surplus land at Jodhpur in Q4 FY21. Going forward, we see the company to be in a never-before position where we have entered into a virtuous cycle of sales, engineering spends and collections. We have also identified a few projects for acquisitions which we intend to close in the first quarter post due diligence. The financial closure for the same is achieved through raising of funds from ICICI Ventures India Real Estate Investment Fund. We believe that this will help company to significantly expand the project portfolio and new avenues of growth. With this, now I will hand over the call to Mr. Parth Chharjar. Thank you very much.
Thank you, Abhishek. Good afternoon, ladies and gentlemen. We are seeing newer micro markets contribute to the real estate landscape in the past 12 months. Post-pandemic, we have seen increasing demand in extended suburban areas across the affordable housing segment, especially in the price range of below 35 lakhs for a one-bedroom hall kitchen and below 50 lakhs for a two-bedroom hall kitchen apartment. The high cost of living, densities, and remote working abilities coupled with cost benefits suggest that the jobs are moving to places near to where people live. Our growth remained strong during the year, withstanding all challenges, validating resilience of our business model. During Q4 FY22, growth of revenue and profitability has lowered compared to the same period last year, primarily due to the land sale. However, we were able to enhance our margins despite the prevailing input cost challenges. In addition, we had factored in unforeseen circumstances in our internal projects working, like aggressive input cost growth, and have taken a price rise of up to 10% across projects to protect our margins. During the year, we received approvals for 2 mega projects, Arihant Akarshan at Taloja on a 10-acre parcel, and Arihant Aradhya at Kalyan Extension on a 7-acre parcel, which have a combined revenue potential of 1100 crores. Both projects shall be qualifying for Section 80 IBA, resulting in income tax exemption. Sales program for the signed up with 4 mega launches, approximately 600 units at Arihant Akarshan in Q1, 400 units at Arihant Aradhya in Kalyan in the Q2, 370 odd units in a new tower in the existing Arihant Aspire project at Panvel in Q3, and 500 units in a new project in Q4. Along with the mega launches, we shall be focusing with small programs on the other projects, which have few new revised approvals upcoming as well, wherein Arihant Aloki at Karjat, we'll be looking at 250 odd units in Q2 FY23, 125 units at Arihant Arshia and Khopoli in Q2, 200 units at Arihant Anmol in Badlapur in Q3, 200 units at Arihant Amisha in Q3 at Taloja MIDC. So we're looking at adding a total of 2,600 odd units in the total new inventory in FY23 to the existing 2,600 odd unsold units. So this would constitute to around 25 lakh square feet of new area having a revenue potential of 1,200 crores. For the sales guidance, we would be looking at a 50% CAGR to the numbers achieved in FY22. Our sales team strength stands at 156 members today and is increasing every month, along with other departments totaling to 371 today. Now I will hand over the call to Mr. Ashok Chhajar, Chairman and Managing Director, Arihant Superstructures Limited.
Good morning, participants, and welcome to the Q4 Concall, annual Concall for the financial year ending 2022. And as directed by Abhishek and Parth, the company has made up their targets, etc., on the start of the year, and almost at every vertical, every thresholds, we have surpassed whatever was envisaged earlier, and going forward also, it looks in the similar fashion. There's a little confusion on the outcomes, which is by some algorithms on the market platform portfolios. That is that on Q4 to Q4 comparison, which as Abhishek told, that when we compare Q4 to Q4, the last year Q4 had an sale of a land at Jodhpur, which was where we did not see any visibility for more than 10 years, and that is why that around 24 crore rupees of sale and value was from the land, and with respect to it, something around 5 to 6 crore rupees of profit was from the books of from the book value due to that sale. And when compared Q4 of past year to this year, if we talk about excluding these land sale, we find in terms of our operational sales, this Q4 has been more better than last Q4. And as annual records acrossly tells, and what we have seen is that we have done, the company has done good in terms of EPS, in terms of revenue growth. So for a revenue growth of 74% in terms of units booked and 91% in terms of value of these sales, for that is FY21 and FY22. The sales are almost 91% up in terms of value. That means we have doubled up the sales, and the 900 and plus flat sale of year-ended FY21 resulted in the balance sheet and the total income and EBITDAs and etc., where we could see up that the EPS could grow up to 10 also. And what we see is that being into a percentage completion method, the future balance sheets can be judged very easily. And if it was 950, which has shown up these numbers, what we see ahead is that 1628 units of sale by and large tells that there would be an growth in the same there would be a growth on these lines. With addition to it, there would be the new launches which would add up very largely. The revenue recognition also from the unsold units. Okay, fine. So revenue recognition also has changed out largely, and the net debt position, as the balance sheet tells, today stands out at 285 crores, out of which 146 crores is where is secured, and where the repayment starts to the company in the year 23, and 153 happens to be from the promoter's debt. And the debt to equity ratio also has lowered down from 1.7 to 1.4 at group level. And when talked about the attributable debt, it has dropped down from 1.3 to 1.02. So we see a significant change in terms of drop in debt to equity ratio. And with all these numbers, we find out that there would be a great year ahead. The business development plan is also at an rigorous pace, for which the fund collection, which was to different channels desired at the last financial year and which could not come. In lieu of it, we engaged up with ICICI, and that utilization would give up multiple folds of revenues and incomes for the coming projects. When it comes to number of projects leveraged, today it has three projects which are leveraged out of 14 projects as on date today, whereas it was 2 projects out of the 14 projects as on 31st March 2022. So we go with the same policy of not mortgaging or not having charge on all the projects, and have larger cash flows free with the company in their hands, so that the mobility of the funds for the expansion of the business is at ease. I throw up the forum open for Q&A. Guests, you are invited to have a discussion as well as questions on the earnings call of Arihant Superstructures Limited.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first line of Bimal Panchal from Bimal Panchal and Associates. Please go ahead.
Yeah, good afternoon and heartiest congratulations for the excellent results. So my question, in opening remarks, you said you have tied up with some ICICI venture. So can you share what are the key highlights of that understanding with ICICI venture? Thank you, sir. Only one question. Thank you, sir.
It is a fund of around 45 crores being raised from ICICI Venture, which would be a free float fund where the projects taken would not have a charge by the lender, and the new projects which are being taken would be completely free cash flows without any escrow account mechanism with the company. So that gives us a lot of flexibility and in terms of growth as well as in terms of free cash flows. And we see that the projects which have been identified, as told in the last Concalls also, are fast-moving products, and we would cope up with the pace of real estate which is ongoing.
Okay, thank you, sir.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much for taking my question. Sir, my question regarding the two projects like Arihant Akarshan and Arihant Aradhya. What is the cost for the land and land cost and per square feet, as well as what is the cost of construction? Like what kind of bookings you are expecting in those projects? These are my first question.
Well, the cost of land for both the lands accumulated in the books is around 75 crores, and the revenues would be to a tune of 1100 crores, and so the marketable sale value happens to be something around a bandwidth of 4,750 to 5,000 rupees a square feet, and when compared to this range where the land cost works out to be 150, 200 rupees a square feet for the amount spent on the land, and with the construction cost of around 2,000 to 2,100 rupees per square feet, we see that there is good alpha in the projects, and both being approval being taken before 31st March 2022, which was the last date for taking any approval under the category of affordable housing qualifying for no tax on incomes. We see that in the next 4 to 5 years, we would be completing the project, and it will yield surprising numbers.
Thank you so much, sir. My next question regarding that 45 crore from NCD, like the interest offered is 16.43%. It is reasonable?
The quality and the type of money are always different, where and accordingly the cost is there. The company will be able to make up, in spite of this cost, more margins because of its flexibility of not having charge and lien on the new projects which are going to be purchased from these. And for the information of the participants, in the real estate sector, there are 3 to 4 type of funds. One is in pure construction finance, where the money has to be utilized only for construction, and which is the lowest cost of fund, where we already have a facility with HDFC at around 11% after this rate increase in by the repo rate, and then comes out to be in one level up where there is a part construction and part take out money for the project or for the general corporate purpose, which goes to a little higher bandwidth, and thereon goes to and one level up where the funds are utilized for the new project sales, which is nowadays called as platform deals. And above that is what we have engaged with, where in platform deal where in the platform deal the projects which are undertaken are mortgaged or the cash flows are with the lender. The fourth level is where the funds which are being taken from the lands which would be purchased from these funds will not have any charge by the lender. So it justifies it.
Okay, sir, got it. Sir, my next question is rising interest rates, like how you are experiencing demand right now.
Well, the news is just fresh in the last week, and we cannot tell that within a day the reactions have come, because real estate it takes a time to respond to any such financial or larger decisions by the government. And in spite of when we see about the India Inc. appraisals happening, It is above the inflation level largely when it comes to metro cities like Mumbai or Delhi, and the appraisals have been in a range of 7.5, 10 to 15, 20% also. So the 0.5% of increase in home loans doesn't makes a person disqualify from his eligibility to buy a loan. On the contrary, with the going trend, he would be able to buy more.
Okay, sir. My last question regarding the raw material prices, like I am referring that operation highlights, like it is mentioned in projects like that cost was increased 300 rupees per square feet, but however the company increased like 500 rupees per square feet in sales. It is like this trend will continue.
Well, the prices now have gone stabilized, and some of the commodities are on an correction of the raw material prices. So the sales prices once touched does not get reversed out when it comes to real estate. So going forward, when the prices would lower down from any marginal, would increase the profitability of the real estate sellers or the products. And when it comes to ourselves, Arihant, we can see it from the increase in the margins and the per square feet of average sale price. Both indicates that this thing has been very well taken care of.
Okay, sir. So what kind of price hikes you are expecting in upcoming quarters?
We don't intend to do a speculation, and we always have believed into that we are into an industry which is into a factory model of sales, and though we have all the product lines ranging from 20 lakhs up to 3 crore rupees, still the objective is that we always sell fast and do not increase the prices largely, because this gives us the working capital at ease and at an advanced stage. And as we see that out of all the projects, even only one project is just mortgaged and the rest are all free, that tells that we are working, the projects have been managed by the company without any working capital. And that has been the key strength of the company to, do the construction, complete the projects without the working capital requirement, A, and B, acquire and purchase the projects at a lower land cost, so that the feasibility of the project does not get suffered to any large extent due to any reverse trend of cycles or increase in raw material cost.
Okay, sir. Thank you, sir. That's it from my side.
Thank you. Before we take the next question, reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Chetan Phalke from Alpha Invesco. Please go ahead.
Yes, sir. Good afternoon, and thank you for the opportunity. Sir, what would your estimated interest outgo for financial year 23? And if you can just elaborate a little on our balance sheet or debt reductions plans going forward, given the positive cycle that we are looking at.
See, in terms of cash flows, cash outs, around 25 crore rupees would be what would be required for interest outflow on cash flow management, cash flow statements, because major of the interest of the unsecured are accumulated to the account, and hence cash flow is not there, though it has an impact on capitalization, amortization, and profit and loss. But when it comes to cash flow management, free cash flows and as well as collections, 25 crore is what we think that would be the outgoing for the interest for this financial year.
Okay. And any comment on debt reduction plans going forward?
I think we will try that after this additional borrowings, we would be able to come nearby to the last year's debt as it is. So we see that the 45 crore rupees of debt taken from one lender, we try to repay to the other lender, and we may be just nearing or equating to the financial year ending 2022 numbers, or it would be an addition of around 5 to 7%. And for your additional information, there is no interest outpay to ICICI for this financial year. So that is what we called about that. There's a lot of flexibility from the lender.
Okay. Got it. Sir, what would be your estimated pre-sales for the year FY23, and how many units we are targeting to deliver?
The budgets and the targets which have been approved by the board and which has been rated to the respective departments is that the sales would be looked for targeted to something around 3,000 flat sales in this financial year, and that would mean around 1,800 crore sales, something less than 1,800 crore sales. We can keep in bandwidth of 1,650 to 1,800, depending upon how much Vashi project starts off earlier, as that ticket size is of 2.5-3 crores.
Okay. So by Vashi you mean Arihant Advika, right?
Advika, yes. So there may be surprising numbers, and I may also be surprised by these numbers of 1,600 crores. My team is geared up, and they are well out onto the field that we'll do the best. And when it comes to sales today, the sales of real estate are generally driven by the institutional channel partners, which is called as institutional brokers, and the largest and the biggest of them, starting from Prop Tiger to Property Pistol, etc., all are engaged with annual contracting plan, AOP, which we call as annual operating plan, as a contract being signed between the company and the channel partners. So this tells the commitment from each of them when they commit that they would individually, some would do around 150 crores from their office in the through financial year, something will do 200 crores. So when it comes to 12 to 15 of them working, and even half of them achieving the target, it would mean that 1,800 crores is not a magic figure.
Okay, got it. So what would be your cash collection for the year 23? Estimated number, ballpark, what are you expecting?
We see around 700 crore rupees of cash collections.
Wow, okay. And what's the status for Arihant Advika as we speak, as in we are planning to go for a grand launch during this quarter, next quarter?
Launch, it was already done, so the product is already launched. It is there for offering of sales since last 1 year. Good that we did not sell largely, because that has protected the cost of inflation of raw materials which has come. And yes, once this demolition all is completed and the site is handed over to the engineering section, which would be something around on the Q2 of this year, and in the Q2 the work should commence, and thereon we will take up exercise of pushing up the sales and again increasing the visibility to the home buyers. And so we come across around 5 of the mega launches are scheduled for this financial year, and around 6 of small launches are scheduled for this financial year. So there are total 11 project launches which would be coming up in phase-wise manner in this financial year. So there is an inventory of 5,500 flats on the shelf, which we call, where the management has given the flats for sale to the sales department, and they are targeting that out of 5,500 they will be able to do 3,000.
Okay. Sir, and how many homes were delivered during this financial year, FY22?
FY22 around 400-450, because some of the occupancies, we take benchmark as occupancy certificate received as home delivered. And the OC for some of the projects which was targeted in the last financial year have come just last week. So this financial year, it looks like around 1,200 flats possession would be given.
Okay. And FY22, it was close to 400, 450, somewhere in that range.
Something like this.
Okay. Okay. So, sir, I was just looking at a few slides in your presentation that says we have a revenue potential of close to 7,000 crores from our ongoing and future projects. So this future projects of 4,600 crores, can we expect all these projects will be launched over the next within next 3 years, or it will take some time?
No, it should not take even that much time. It is targeted to be already all approvals are received for these future projects, and they are scheduled for launches this year itself.
Okay. Okay. And in your view, how fast we can do a pre-sale of, let's say, this 7,000 crores inventory? Can that happen over the next 4 years, 5 years? Ballpark, any time frame in your, as per your understanding? Okay.
Collectively,
within
3 years we should be able to achieve it.
Okay, so within 3 years, our cumulative pre-sales should be around 7,000 crores.
Yes.
Oh, okay, okay. And
something. It may be little lesser than that, but it could be something between 6,000 to 7,000 crores.
Okay, and over and above this 7,000 crores, do we have any other excess land parcels, and how much that can contribute, or any comments on that?
No, whatever new would be purchased, that would be added on. But two of the land parcels of at 100, which is worth of around 100 crore plus, has not reached the stage of design board, which would come up. So when we talk about balance sheets, it is something around one or small parcel, 1 or 2 parcels of land which is worth 100 crores, which are unutilized, and where the numbers have not been shown.
Mm-hmm. Okay, okay. Just one last question, sir. Any comments or outlook on the dividend policy going forward?
The company today is into a very expansion mode. Hence, we request the shareholders that more the money lies with the company, it would be able to reach greater heights. And hence, this year there was no dividend declaration as board decided. For the next financial year, we'll leave it up to the board to decide how to do it up.
Okay, okay. So just one last question, if I can squeeze it in. So how much of this 7,000 crores of pre-sale that we expect to do over the next 3 years, 4 years, how much of this 7,000 crores will yield into, let's say, our PBT or EBITDA, ballpark any number for the listed entity?
So we would move CAGR as this would be a forward-looking statement, and hence we see that the CAGR which is looked forward, it should be something around 50% for this financial year. The next year it should be around 33% or 40%, and the third preceding year should be around 30%. We don't know that we will be able to do a 50% CAGR YOY, but I'm confident that we would be doing it up in this phase, and with the company growing in size, and CAGR of 30% also is expected.
Mm-hmm. All right, sir. And that was very helpful, sir. Thank you very much.
Thank you. The next question is from the line of Vikas from Healthtech Services Private Limited. Please go ahead.
Yeah. Thank you. Hello.
Yeah. Good evening.
Yeah. Good evening. One of the slides is there is a project Bella is there, which is a 1 BHK office and 2 BHK office is there, sir. Whether after the COVID, this kind of the project is feasibility is there in the market, sir?
I think when we talk about feasibility, yes, our estimate and contract division has very well taken care of the cost, and vis-a-vis the marketing division has put up the correct sale price which would have earnings, and when we compare to the projects in and around, we found it out that we are though we are selling at same or maybe an 2 to 3% higher than the adjoining market, but due to the design and the uniqueness of the product design, which was one of its own kind of having an inbuilt office pod inside the house, the sales which have confirmed and been turned out is already giving a confirmation of response of 311 units by the year ended March 22 in 2 months of launch, that is February and March. And in April also the same music is continuing, and there is sales ongoing in sustenance also in this part.
Okay, so we are confident enough to sort out all these 494 units as well.
We are launching up one more tower in the Q2 of this financial year. So this project has 8 towers. 3 of them are already launched, and out of which 2 are almost 70% of 65 to 70% of completion in terms of value terms of engineering done. And we see that we would be able to do up. There is a demand, pent-up demand for the new phase of new tower of another 400 flats to be launched up in Q2.
Okay, thank you, sir.
Thank you. The next question is from the line of Ankit Bajaj from STCR Finance Limited. Please go ahead. Mr. Ankit Bajaj, please go ahead with your question. Your line is unmuted.
Good afternoon, sir. Sorry, I was on mute. My first question here is, how many of your projects have existing projects have received OC this year?
For the projects on sale or for the projects which are already 100% sold, 100% completed?
The projects that are on sale.
Projects that are on sales are to a tune of around 6 of them where the OCs have been received and which we can categorize as ready for possession.
Okay. And how has been the collection this year compared to previous year?
This year the collection was around 416 crores, and as in the fact file given, the collection have increased by 45% on year growth. So it was 287 last year, and we have done up 417 crores of collection this year.
Okay. And any new land that were purchased this year?
This year, we did up in Kalyan extension land purchase where we have received the permission. So that is to a tune of 7 acres and 9 lakh square feet. That is Arihant Aradhya.
Okay. Maybe the purchase price, sir?
That was 22 crores.
22 crores.
Yes.
22 crores or 72 crores, you say, sir?
22 crores off?
No, did you say 22 crores or 72 crores?
22. 22.
Okay, sir. Thank you. Thank you very much, sir.
Thank you. The next question is from the line of Ronald Sioni from Sharekhan. Please go ahead.
Yeah, good afternoon, sir. Actually, I just want, sir, I wanted to know the construction outflow, construction outflow which will be expected in FY23. As we are seeing around 700 crores of cash collection, what will be the construction outflow in FY23?
400 crores.
400 crores. Okay. So then still you would be left up with a lot of money, right? 700, 400, then another sales and marketing cost and also interest. Still there would be around 100, more than 100 crore cash available for FY23, right?
Yeah, it looks so.
Okay. Okay.
That
So
deployment that would be the deployment for the engineering section utilization further with the new projects also.
Okay. Okay. And there has been somewhat changes, frequently each quarter with respect to, previous quarters or years in terms of, say, sales figure or in terms of million square feet. So what kind of adjustments is being done? Like, does this get added into the next quarter or something of that sort?
No, we follow a method that on each quarter basis, wherever the payments have been received, are taken as sales booked, and we net off whatever numbers we give a net off numbers after cancellations which would have happened. So when we see a revision of sales number, it means that we are showing you net off numbers, final confirmed sales which are there on the books, where there is no, where all the cancellation have been accounted for. So that is why this change of behavior would be there on every quarter to quarter, where there would be new sales which would be added on, and there would be a direction of cancellation. So by and large, at our company level, generally there is an cancellation of around 10 to 15%.
Okay, 10 to 15%. And during the quarter, we have seen the rise in inventory being booked, and which has led to strong gross margin expansion. So has there been one-off or something that has increased the inventory during the quarter?
The engineering which takes place when we talk about inventory on the balance sheets, it is the work in progress, and the inventory is into two forms. One is WIP inventory, and the other would be the ready position inventory. The WIP inventory, when it is increased, that means engineering has taken substantial speed, and for the unsold portions where the revenue recognition does not extracts figure out of this WIP, the rest numbers are towards work in progress, towards unsold inventory. So the time a flat gets sold, that is the time when WIP again gets decreased, and that is the reason what we see as WIP.
So the P&L which it shows the changes in inventory, that would go up or going ahead. It just says that the construction spend has increased, which has not been sold. Is it right?
We'll get back to you. We'll get back to you on these numbers from the CFO. I'll note down your number and name. Mr.
I'll get in touch with you.
Ronald. Okay, fine. Yeah, sure.
Yeah, and the last one is the effective tax rate. How do you look at the tax rate is also increasing? So from FY23, what should we assume as effective tax rate?
Effective tax rate to whom?
In the P&L for FY23.
The effective tax rate is, the tax rate is same exactly what is there for all the companies. So our effective tax rate for the holding company is 25% plus surcharge.
Okay. Because it shows around 15% to 16%, which we have been in FY21 and FY22.
That happens because of the Section 80IB income tax projects where MAT is only there, where it is not. So Arihant 4 Aneka of the company which contributed to the largest number of this financial year on standalone basis also, which was 25 crores out of 41 crores. So that margins due to that ATIB project PAT margins, the effective tax rate got reduced from 25 to 15%.
Okay. Thank you very much. Thank you.
Thank you. The next question is from the line of Tirth Muchala from LUC Vidya Advisory. Please go ahead.
Hi, sir. Thanks for taking my question and congratulations on a fantastic year. So my question is that we have very ambitious launch plans. So what's the internal target for sale as per the launch? Like, do you hope to sell like 20% of the units in the first year or things like that?
Yes, that is the plan that we target to do up and sell about 20%. Some of the project really performs very far well, like Arihant Superstructures in the month of February, March, gave a sale of almost 65-70%. So the wish list is always that we sell around 50%, but we are happy with 20% because that covers up the requirement of working capital.
I see. And so how is your experience with Adrika? Because if I'm not wrong, then I think this is one of the most premium projects that the company will do. So has the experience been very different? Has the brand been received well?
Well, the company has done such projects earlier also. As we told that we always take projects with respect to population metrics, and this forms to be into the richer class or the higher income group, which is around 5% of the company's total portfolio, and the rest forms to be into 27%, 25% into middle income group, and the 65% into affordable housing. The company has been doing such projects earlier also. The market as well, the buyers are confident about ourselves executing such kind of projects as it has done earlier. And the mock-up flats, sample flats, everything are ready. The show flat where a customer can identify what he's going to get and how the finishes would be.
Okay, and have we had to hire some, let's say, higher paid talent for expansion of the company in the recent past?
We are increasing the strength of employees across all these sections. But if it comes to a particular project like Vashi, we already have a good team force of sales for the project in place.
Okay, super. So can I ask a couple of more things?
Yes.
So one is, if you guys have any thoughts on the market cap of the company, it's around 600 crores, and you compare it to the pipeline, it's very small. So do you have any thoughts on that?
I leave it up to the market to do the price discovery of the equities which the companies have 10 EPS, and going forward there would be a CAGR to it also, and we accept the price or the market cap which has been discovered by the shareholders. Offhandedly, other than the shareholders, when it comes to discounted cash flows, TCS, the numbers are almost 2 times to what those spreadsheets and Excel sheets tell. But the reality is the markets, and we see that a company of this strengths in terms of all the verticals, right from managing the finances to execution and procurement of new projects, this would be valued very good in the coming years.
Okay, so super. Just one last request, if I may. All the bigger real estate companies provide a cash flow statement as for the quarter, so that would give a lot of transparency to us investors. So if you could please start doing that.
In the investor presentation, which would be there, uploaded on the exchanges in the next day, the revenue and cash flows with economic interest would already be there in the investor presentations from this quarter itself.
Would that be something like a detailed cash flow statement, so we can follow, land purchase cash outflow or things like that?
That would be elaborated one. For that, I would wish my team to get in connection with you and explain the detailed spreadsheet as it is not an one simple line of statement. So all the data can be provided to you.
All right. Okay. Thank you, sir.
Thank you. The next question is from the line of Vaibhav Kacholia from VK Capital. Please go ahead.
Hi, sir. Thanks for taking my question. One thing I wanted to understand, sir, when we take up a project, what is the kind of IRRs we are generating on projects? And maybe you can give us an example, like you had said, this land we bought for 75 crores and the sales can be 700 crores. So what will be the cash flows and what will be the IRRs?
We look at an IRR of around 30% on year-on-year basis, which when we envisage 30 to 35%, in reality it boils down to the bandwidth of 24 to 30%. When all the uncertainties or certainty, all the factors come into place in reality. So whenever we take a project, we eye for this type of IRR.
Okay. So what is the main factor, sir, which pulls down the IRRs? It's the delay in sales and collections and cancellations?
Sometimes there are many factors like sales, engineering, finance costs, the time duration, cycles, the timing of the gap between the vendor payments and the collections, etc., etc. So generally, it should never be taken into account very correctly. We should always eye for something X+, so that we end up into a right figure.
So is 20% a more fair number as shareholders we should expect, sir?
20% from?
IRR on any project?
Yes, it would be more than that. ROE would be to an extent of 24%.
Okay, got that. And sir, can you please explain how do we do the sales to the channel partners? Like how much are they paid? Are they paid around 5% of the sales values?
We start from 3% and the few of them achieve the annual operating plans where they receive 5%. So and cost to the company is on an average of 4%.
Okay, got that. And which are the biggest ones, sir? These Anarock and Square Yard and all these guys are also working with us?
They work with us, but the larger numbers are from many other ICPs also.
Okay, you said I think Prop Tiger.
Yeah, so we don't give sole selling or mandate to one company, and where the mandating company takes up an target of accumulation of all the brokers and channel partners. We ourselves have our own in-house team where a call throw away, all the channel partners are start working in no time for the company, and they are directly connected to the company rather than through any selling machine.
Understood. And so one more question, like where would our rank in Mumbai MMR region be in terms of sales? Any idea on that? Like we would be in the top 5, top 10 companies?
Top 5?
In terms of our pre-sales?
In terms of pre-sales, unit-wise, yes.
No, in terms of value-wise?
Value-wise in MMR region, yes.
Top 5?
Top 5.
Okay, but there would be a lot of other listed players, sir, Godrej, Oberoi, Mahindra, who would be larger than us, right? We would be in the top 10 for sure?
In Navi Mumbai, they don't hold any position.
No, I'm saying all over Mumbai, including Mumbai.
No. Mumbai, when it cannot be compared, and it should not be compared. I will request you not to compare on that basis, because the ticket size of and per flat sale in Mumbai is around 5-10 crores plus also. So when it comes to unit wise, yes, we may be on top 5. When it comes to value wise, it may be in a bandwidth of even around 20, because we sell our products which are largely into 50 lakhs, sub 50 lakhs affordable housing. So we don't have large ticket size projects in quantities.
Right, got that. In fact, sir, I was thinking if our numbers. Yeah, go ahead, sir.
That is why when it comes to analyzing, we defend ourselves saying that only cash collections or cash flows should not be the only measure for, or a standard template for evaluating and real estate company, because when we talk that the zinc thing and the loveliest thing about real estate is about affordable housing, which everybody likes, and on the other hand, when we talk about comparing cash flows with from 50 lakhs to companies with 5 crore rupees of flat sale, it will never match. So P&L happens to be the PAT happens to be a major factor also, and the investment return happens to be the major factor on the capital deployed or the net worth deployed. So we had a net worth of around 160 crore, 163 crores collectively with subsidiaries in the last financial year, which today is around 212 crores, 203 crores. So that is what the growth is, that from 163 crore rupees of deployed 163 crore of net worth in hand. That is what the company as in capital has, and rest forming out to be the funds borrowed and etc. But the capital growth, when we talk about, it is like that we have done sales of 4.7x crores to the net worth. We have done collections to 2x crores. That means if we had 163 crores and we did a collection of 415 crores, and 2.5 times net worth collections we have done. So that is around 5 months maybe do one cycle of rotation, and with the net worth when compared for the revenues also, which is at 332 crores. That means from 163 crores, 332 crores of revenue means 6 months mein we are doing one rotation within 6 months, which is 2x. So 163 plus 163, something around 332. And the PAT margins from the net worth, that is the capital which the company has of its own, it is 25% of the net worth, where the PAT came out to be 41 crores, 41.22 crores. So we compare like this also sometimes.
Yeah, I understand. It's in fact extremely impressive even at the ROE level. So in fact, sir, in that context only I'm asking, in fact, next year if we do 1,500 crores, will we be in top 10 including Mumbai?
I don't know how the other companies are doing, because real estate is doing so good. Everybody is ambitious, and many have super growth plans like ourselves also. We would like to see that we are a step ahead of them, but all companies are good. Many companies have really great strengths in terms of acquisition of market share, etc. And it would be an outcome only after the year ended.
Got it. Makes sense. And sir, can you explain this? Why have we taken this loan at such a high rate when we are getting construction funding at 11%? I mean, all the construction funding we can get is not sufficient to meet our needs, is it? Beyond our network?
When it comes to Arihant Superstructures Limited, our company, only one project out of the 14 are where construction finance is availed for, that is Arihant Aspire from HDFC at the rate of 11% per annum today, and a bandwidth of 10.5 to 11%. And
this loan we can't extend, sir, for future projects. They will not be willing to give at in today's market at the same rate. More if we ask them.
हाँ मिलेगा. अगर आपको स्टील सीमेंट के लिए पैसा खर्चा करने का तो इस रेट में पैसा मिलेगा, लेकिन अगर आपको पैसा बाहर लेके जाके जमीन खरीदने का है तो नहीं देंगे वो लोग.
Got that. Okay. So can't we use like our own net worth? Okay, I got that. So can't we use our own net worth for land acquisition and more construction funding for other projects?
Everything is deployed.
Okay.
Nothing is free flow in the bank. Pura 200 crores is already sitting in the books and the balance sheets with the assets on the side.
Okay, got that. And for this land acquisition, we have to pay the 16% kind of level, is it? We can't get at 12, 13, 14?
We would like to.
Okay.
For your information, for the market's information, the takeout money or the land acquisition funding money, where even the free float is, where there is a complete flexibility, if one checks out into the market, the cost of fund today for such type of funds to anybody is to an extent of from 20 to 24%. So the platform deals or the equity partners which we equity fund structured deals which happens is from a bandwidth of 20 to 24% per annum, and company getting it at 18% at 16.545% is a very good rate.
Okay, got it. But sir, even after paying 20%, people are still making money?
In many of the Mumbai projects, it's the need of the hour for a particular period of time, and so I think there must be a business model for it, and it has been working all these years.
Got it. Great. Thank you so much, sir.
That is why when we talk about that listed companies, if they have equity in hand, the ratios and the sizes and the numbers, everything changes. So when it comes to debt versus equity, the company if it can raise funds through equity is more preferable because it would give more benefits to the shareholders in terms of percentages, ratios, and values.
Right, I understand. In fact, sir, for our scale of operations, our net worth and our market cap is pretty small. So are we also, like, in some ways, do we need to strengthen our brand at a corporate level?
Brand in terms of the sector where we are operating is already at the most preferred and most highest level. So the brand, as a recognition, it is topping the charts. And yes, though very aggressive, the company and its model of business, we are not very much, we avoid taking very high risk. And that is why there is an organic growth to the company. So when we talk about how did this company grow, it was around 40 crore rupees of capital around year 2012, and thereon till now, without any raising of capital, we have reached a size of 200 crores of net worth plus all these years, and that would have been paid to a tune of around 350 crores. So it can be told that from 40 crores, the company earned 200 plus 350, 550 crores. So from 40 crores in 10 years, 550 crore rupees of earnings could be done.
What is this 350 crores, sir?
10 साल तक अपन ने ब्याज दिया, तो अगर सपोज अपने पास सारा पैसा इक्विटी का होता तो ब्याज नहीं देते, तो ब्याज नहीं देते तो ये सारा पैसा अपने प्रॉफिट में आता ना दोस्त.
Got it.
पैसा कमाया तो इतना ही था ना.
Got it. No, sir, in fact, I think at a consumer level, our brand must be really strong. I'm saying more at a corporate level, is there a requirement? Like, do we feel that, and is there any way to do anything about that either? Like make some very marquee projects, like in Mumbai, a lot of builders have done some really marquee projects, and like a Beaumont or a Oberoi, Sky Heights, which have really helped them uplift their brand. At a corporate level also, I'm saying.
See, by doing a project of this style, only makes up a corporate brand is not what we believe into it. But yes, the relationship and the visibility can be increased in terms of corporate level for the company, because it is into an affordable housing segment, and its strength is being affordable housing. And we will still like to live in this place for another 5 years.
Got it. Makes sense. Thanks, sir.
Thank you.
Thank you. The next question is from the line of Chetan Phalke from Alpha Invesco. Please go ahead.
Yeah, thank you for the opportunity again. So just one last question. Since we are going to spend close to 400 crores on our engineering this year, and going forward our spend will be more than that, can you throw some light on our engineering capabilities or our in-house structural team? Is it completely in-house, or we are outsourcing our engineering to these EPC players like Capacity or others, or are we thinking in that direction?
Going forward, we do not engage with the larger EPC contracts, construction companies. We also don't do in-house by employing laborers and wages. We do on semi-contractual basis where subcontracts have been given on a particular assignment. That is, an electrician is given an electrical contract, a plumber is given a plumbing contract, and civil works is given a civil contract. The finishing tiling works are given their respective contract. So this helps out in terms of reducing the cost of construction, and that is what all efficiency is all about. And it helps out to even have it helps out to have larger control on the labor cycles.
Okay. Got it. That's it from my end.
And if we buy it from our own, when we talk materials, larger material like steel, cement, etc. being bought, so economy of scale happens, helps out to even buy material at lesser cost. Also, when we talk about branding, in my life, I have always believed that the vendors are the best brand ambassador of an company, because they are on the taking side rather than the giving side. So when we are directly in contact with the material supplying agencies or the vendors, and the relationship between them, which is continuous since last 2.5 decades, helps out to build the brand to a larger extent.
Okay. So instead of dealing with one large EPC player, we are dealing with multiple vendors who specialize in their own respective things, and that's how it will continue going forward.
Yeah, or else you are paying for a courier subject. That is, the EPC contracts also subcontracts to the same guy, and they charge up an 18% of profit on the services being taken and given to the specialized contractors, because finally the works are done by specialized contractors.
Mm-hmm. Okay. All right. Got it. Thank you very much.
Thank you. Ladies and gentlemen, this was the last question for today. I will now hand the conference over to management for closing comments.
Thank you very much, everyone, for taking the time out and attending this conference call. It was an enlightening and enriching session with such a good number and good quality of discussions that we have had. Thank you very much.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect.